commodity markets, Brent is up by nearly 0.4%, 110.25 is the current level. Let's get out to Ron William, who's technical strategist at MIG Bank, joining us now. Ron, thanks for coming. So, a few charts that you've brought along to help us understand what's going on in the oil markets. Let's get to the first one, which shows us oil under pressure at $100.
Yes, well, we're looking here at West Texas crude oil, ranging for several weeks into the new year of 2012, and that has very much been under pressure on the $100 psychological mark, which also coincides with a technical golden ratio level at 61.8%. The range is likely to push lower in the short term into the $90 key support level, but also into maybe, as a drawdown scenario, into $83, which is back where the Libyan crisis sparked off early spring last year. So that's the short-term outlook on West Texas, which may likely have a few upside scenarios over the next few months, challenging the 2011 peak that you can see there on the chart.
We do have just a quick news flash to bring. Sorry, Ron, to interrupt you there. The German foreign minister, according to Dow, rather, saying that he expects the EU to agree on sanctions against Iran. So a bit more movement on that front. Let's get back to Ron though and get to his second chart, which shows the oil trend in euro terms. Tell us about this one, Ron.
Well, yeah, I mean, it's a key chart to be watching if you want to see oil's trend in terms of Brent crude oil in a lot more powerful on the upside when it's priced in the single currency euro FX rate. And of course, you can see there it's a very strong trend. It's been ranging around the 2008 peak level, so it's markedly higher than other oil charts. But of course, that's partly down to the fact that the trend is being magnified by the European currency's devaluation of up to about 15% since 2011. It also highlights the point, I mean, just how much growing headwind higher oil prices will present on European nations, especially in terms of importing pressures as their purchasing power starts to decrease with the euro weakening day by day.
What about the spread as well between Brent and WTI and how that relates to geopolitical risk?
Well, this chart and the following chart are key proxies that investors and traders should be watching over the next few months as this July 1st deadline approaches for the EU-Iranian oil embargo. And this is a spread chart of the difference between Brent crude oil and West Texas. Of course, Brent usually trades at a premium to West Texas, currently at a $10 premium. But what's interesting is that this spread tends to blow out quite sharply whenever there are any kind of geopolitical risks, and that tends to push the Brent crude spread much wider over West Texas. So you can see there that early spring last year, when we had the Arab Spring, there was an acceleration in that spread, which was later exhausted by the Japanese earthquake during that time, and then it made a record of about $28 on that spread. Currently, we're trading at 10, as I mentioned, and this is definitely something to watch in the coming months, just to have maybe a leading indication of how the market is pricing in any geopolitical risks as the days unfold.
Ron, just very quickly before we let you go, a quick look at the volatility.
Yeah, well, on a historical basis, price spikes in oil are not only regular, but they are cyclical by nature. They happen every 1 to 2 years. Of course, the extent of a price spike changes from each time window. But this chart shows that usually price spikes, when you look at it on a historical basis, deviate up to about +1 to +2 standard deviations from the mean. What's interesting is that we are currently at very kind of low volatility levels on oil, and most traders will look at this as a potential mean reversion setup over the next few months, where we do have upside risks for a price spike on oil coming into the summer period of this year. Okay,
Ron, thanks for that. Ron William, technical strategist, MIG Bank.
And let's go back to Paul Donovan and get some final thoughts. Paul, for all the ills of the